Let's talk about Oprah. Oprah Winfrey, one of the most prolific people in this era, from the impact that she's made on television, on the big screen, the societal impact she's made. She's definitely a true icon and the epitome of a self-made billionaire. Now, I'm definitely not in Oprah's financial books, but a lot of websites have confirmed that her net worth is about roughly $2.6 billion with a B. Definitely well deserved. I'm sure a lot of you guys are looking at that and thinking that is a lot of money, but just keep in mind of how you feel right now and compare that to how you feel after I give you this information. So at the peak of her televised show, The Oprah Winfrey Show, when you were getting a car and you were getting a car and everyone was getting a new car, she was making about $315 million every single year. And that's a lot of money, but just stay with me and just check this out. If she's making $315 million per year, that's about $25 million per month. $25 million per month is about $6 million per week, which is about $860,000 per day. Now, I don't know about you, I understand that $1 billion, let alone $2.6 billion is a lot of money, but when you break it down to the amount that it is over a smaller period of time, I personally think that's insane. Well deserved for her, but insane. And maybe you feel the same way. Definitely leave comments below on how you feel about that. So for me, when you break that down from how much she makes per year to how much she makes per day, that not only sounds insane, and for the average person like me, that's because I'm imagining all the things I would be able to do and accomplish if I made a substantial amount of money like that within a small given period of time. And with that being said, that's why I firmly believe that the frequency of how much money you're getting equals financial security, which ultimately equals happiness. Now let's bring this back to an everyday investor's perspective, like you and myself. Imagine that you're investing in so much dividend paying stocks that you're actually able to take that passive income and do things like pay your bills. That's a dream of a lot of people, including myself. And me personally, I do invest into a lot of dividend paying stocks, but the majority of those stocks happen to pay every single quarter. Now, of course, yes, if you invest into many different companies, then you would definitely get paid dividends eventually every single month, which is what I'm dealing with now. But again, one of my goals is to have enough passive income in the form of dividends to be able to pay my monthly bills and then some. And unless you're adding recurring bills or taking them away and considering utilities, typically your recurring monthly bills are going to be roughly the same. So it's typically more convenient that the income that you make is also roughly the same. That for me is the mental mindset that I had, which led me into investing into monthly dividend paying stocks. Now, this all may sound great, but there are definitely a few things that you want to keep in mind before you start going off on your adventure and looking up monthly dividend paying stocks and throwing all your money into them so you can start making even more passive income. For one, according to my best friend, Investopedia.com, there are a little over 3,000 publicly traded stocks that actually pay a dividend. Now, out of those 3,000 plus, there are roughly 50 stocks that pay those dividends every single month. So the frequency of those are fairly scarce. Two, those companies typically are related to commercial or real estate. And that's important for a few reasons. We're gonna get to that starting with three. A word that you're gonna see a lot when you're doing this research for monthly dividend paying stocks is also an acronym called REIT. REIT stands for Real Estate Investment Trust. A publicly traded company that's a REIT is a type of company that owns or operates single tenant commercial or real estate properties. As an investor, it's basically your way of investing into real estate through the stock market. These properties primarily range from hotels, data centers, apartment complexes, retail centers, and warehouses. Now, what's also really important is that not every publicly traded real estate or commercial based company is automatically considered a REIT. There's actually a few qualifications that require something that you can look up. It's definitely public information. But one that is really important is the fact that all REITs must give out 90% of their taxable income back to the shareholders in the form of dividends. Why? I don't know. That's just one of the rules. Now for us, depending on the type of company that can be a great thing because that's a lot of money coming back to you for simply investing into them. But what you need to keep in mind is that when you start doing your research for safe dividend stocks, one of the criteria that you normally look into is going to be a little different when you look into it for a REIT, and that is the payout ratio. This is something I've talked about before, but the payout ratio is the amount in dividends per share that's given out divided by the earnings per share within that period of time. For me, an easier way to think about that is within a year, how much money did I give out to you guys in dividends divided by how much did I actually make per year. There's typically a range that you want to keep in mind when you're looking for healthy dividend paying companies when it comes to their payout ratio. For example, a payout ratio ranked good will be anywhere between 0 to I believe 34%. Of course, you don't want one that's 0% because then that more likely means they don't pay a dividend. Then you have a healthy range, which is going to be between 35 and 55%. Now that's your sweet spot right there, because that shows you not only are they giving a pretty substantial amount of their funds in the form of dividends back to you, but they're also keeping at least 45% of that back to them to reinvest into them, which will hopefully result in more income, which will hopefully result in more dividends for the investor. And then anything above that would be unhealthy. So when you think about the fact that a REIT has to give 90% of their taxable income to the shareholders, that's a lot of money. Now, of course, it's easy for them to do that because the majority of their funds comes from rent from their tenants in the form of cash, so they have a lot of cash flow, so they can afford to do that, and that cash, I believe, wouldn't be taxed. So they're able to do that, but try not to pay attention to the payout ratio of REITs because more than likely it's going to be way higher than 55%. And the fourth thing you want to keep in mind while you're doing your research for monthly dividend paying companies is that you're not going to find a lot that are meant to be long-term growth stocks. There are a lot of companies like Apple that not only pay a dividend consistently for a great period of time, but also typically increase over a great period of time as well. So not only are you making passive income on the side, but more than likely if you invest into the company and 10 years later you pull out of the company, you're more than likely taking more out than what you put in. But considering that monthly dividend paying stocks have to give up a lot of money to the shareholders at a higher frequency to pay you every single month, they may not all grow substantially over a given period of time. That depends on what the company actually does or their mission statement, something that I always recommend you look into as well. And that's resulted in me having maybe 5 or 6 monthly dividend paying stocks out of the at least 25 to 30 dividend paying stocks that I have. And I'm gonna give you guys 3 of them that I love investing into. The first one, and this is probably by far my favorite monthly dividend paying company, it's Realty Income. Realty Income is a REIT and they focus on single tenant commercial or retail properties. These companies are typically pharmacy, warehouses, or retail companies. More specifically, you're looking at companies like CVS, Walgreens, Dollar Tree, Dollar General, I believe FedEx. I'm pretty sure I saw somewhere that they also have Sam's Club as a tenant. Now, 2 things I love about this company. 1, their monthly dividend. Not only have they been paying this monthly dividend for a long period of time, but they have a record of increasing the monthly dividend for a long period of time. Who would have thought, based off a company that actually nicknamed themselves the monthly dividend company? Like, no joke. It's wild. But the other thing I like about this company is its actual potential to grow in its share price over a given period of time. That's something you can notice based off the type of tenants that they have. These companies are primarily essential-based companies. They're filled with things that people need. So it gives you an idea of how important they were during our pandemic, for example. People needed essential goods from retail stores or groceries from grocery stores or medicine from pharmacies. So besides the fact that they dropped pretty hard just like any other company in share price at the peak of the pandemic, I knew they were going to go up, and besides that period of time, that they would last over a given period of time based off the tenants that they have. The next one is SPHD, which is the ticker symbol for Invesco's S&P 500 High Dividend Low Volatility ETF. Remember, ETF is an exchange traded fund, aka a basket full of stocks. And yes, disclaimer, there are monthly dividend paying companies that are also ETFs. So this particular ETF kind of is defined by the name of what type of companies it has, but basically the S&P 500 is the top 500 largest companies within the US stock market. Now within that 500, this particular ETF actually tracks down, I think, around 100 or so of the highest dividend paying stocks. Then from that amount, they narrow it down to maybe 50 to 75 of the least volatile stocks from that. So not only are you getting a basket full of stocks that are high in dividend yield, but they're also low in volatility, which can be a good thing and a bad thing. We're gonna focus more on the good things because you could potentially avoid dips as the stock market dips because the stocks you're investing into aren't as volatile. Also, that's really important alongside the high dividend yield because it increases the financial security that you're getting paid dividends, let alone every single month. The third company is QYLD, which is a ticker symbol for, and let me see if I can remember this, Global X Funded Global X NASDAQ 100 Covered Call ETF. I'm impressed with myself. So this ETF has an interesting way of being able to pay its shareholders dividends. So what it does is it tracks stocks from the NASDAQ 100. The NASDAQ 100 is basically the top 100 largest companies and most traded companies within the NASDAQ, which is primarily a list of tech stocks. And from within that narrowed down list, they actually sold covered calls, which is a type of option, something I can discuss way later. And they take the premiums that they earn from those and they pay us, the shareholders, back in the form of dividends. Now, besides that, this is really interesting from a lot of other ETFs, let alone a lot of other dividend stocks. Other reasons why I invested into this company out the gate is the fact that it was a fairly cheap company in the beginning, which is honestly really naive, but in the long run, I got fairly lucky, and the fact that they paid me every single month, hence monthly dividends. So you definitely want to try to avoid the naivety of seeing companies that are really cheap and they pay every single month, because even though I was lucky with this one, I have failed and a lot of others. So it's something you want to keep in mind as well. But in the grand scheme of things, with these three companies, I have not only had a history of consistent dividend payouts from when I invested into them 3 years ago up until now, even through the pandemic, but over time, those dividend payouts have increased. Now, of course, this is only a really small step to having your portfolio pay you like Oprah Winfrey gets paid, which, by the way, I didn't even get to the part of how much she makes every second. It's insane. But it all starts with just investing at least $1 into a brokerage app, into a stock, whether it pays quarterly or even monthly. And if you're somebody that's starting to invest for the first time or you're not sure where to put your money into, you really need to check out this video. These are all brokerage apps that I personally use, and I rank my favorites by how much they're essential for beginner investors like they were for me. So hopefully you check out this video, and I appreciate you guys for watching this video. And until next time, as always, take care.